believe today is going to be a great day indeed. Let's go straight to business. We have no time to waste because our interest is for you to become a pro, a successful trader. So let's look at what we have here. Today we'll be dealing on structural description. So this is the basic knowledge, the basic foundation of Forex or to Forex trading. It will help you improve your knowledge and wisdom, your understanding to proper analysis. For example, now you can't just jump into the chart and you say you want to analyze chart. You want to analyze the market. You begin to take your rentable tools, your trend line, your sec, all of those things. You begin to draw it. At the end, you have more than 10 drawings in your chart. You have more than 20 trend line in your chart. You are just confused. It's just like a mathematics, like somebody who is solving a quadratic equation. So, all right, the good news here is that today I'm going to make everything simplified. So it's going to be easy for you to understand in this trading session. So all I just need is for you to pay attention and take your writing material to jot down everything you are seeing, because very soon those videos will be deleted because of speaks. So so let's go straight to the board and see what we have here. We have social description, as I said earlier. So let's read what is written here. This is the basic foundation to Forex trading, as I said earlier. It is the basic foundation, the basic knowledge. If you can understand this structural description, like what I was trying, because I do explain little of it yesterday when I was teaching, but I didn't went deep into it. But today we are going to dig into it deeper. Alright? So it is the basic foundation to Forex trading. You see, it is the basic foundation. When we say basic, it's something that starts Forex. Like the knowledge as a beginner or as an advanced trader. Many people, they call themselves and they have started trading, but they don't know all of these things. You see, so if you are in this group, you are lucky enough to have this for free. So let's go. It will help you improve your knowledge and understanding to proper analysis. It will also help your knowledge, your understanding when you are analyzing your chart. It will help you, it will give you proper understanding of your chart. You will start reading candlesticks as a pro after this session if you have started trading already. So this session includes for beginners and for advanced trading also. So let's go straight to it. Now we have this uptrend here, and we also have this downtrend at the left hand side. This is the uptrend structure, and this is the downtrend structure. Right? I'm going to take my wiper. Excuse me. So alright, we are back again. Sorry for the delay. Okay, so let's go now. So we have our structural low or high here, and we have our structural high or low. Now, why is this structural high or low, or structural low or high? Now, it is because when you are trading support and resistance level, support can be your resistance and resistance can be your support level based on the change in the market, based on your market structure. So here you can see it, we have our structural low and structural high. And also here we have our structural high and structural low. That simply means this line you are seeing, this trend line that you are seeing right here, can become your support level and can also become your resistance level. And this trend line you are also seeing here, it can become your support level and your resistance level. So, but in this level, you can see it as your support level, and you can see this as your resistance level. In other words, sellers are in this point waiting for the market to get to this point and sell. That's why you have this down arrow indicator pulling back the price down, because sellers are here waiting for price, and here buyers are here waiting for the price to get all the way from this place down to this point. before it reverses. So that's why we say. So in some cases, why this thing has changed, why it can change is because of break construction. We have what we call break construction. Sorry, this marker, I think it's fake. Yeah. So now what we have break construction simply means it came and break through this this trade line. This is break construction. Maybe it came back to retest before it heads back up. So make sure you are following so I can understand. Now this is the trend line. This is the trend line here. So now price, this is price. Price, and this price are buyers. Simply means this is a bullish movement. This is a bullish up movement. So now buyers push the price and break this structure. So immediately this structure is being break and it was retest before continuation. Then this structural high becomes your structural low. It's no longer high anymore. It becomes your structural low. Hope you are understanding me. So in this scenario, we have the uptrend structure. Now this is what I was saying, that market will never move up straight once. So it will always go back your higher high, come back to retrace the previous low, which it's not going to go back down to that previous low, but a little far away from that. Is why we call it higher low. So the process of price coming back to retrace is what price is trying to do, is to gather liquidity before it has the power, the energy, the capital, the enough strength to push up the price up. So we call it retracement or backtesting. So in this scenario, when the price is retracing before it can move forward, simply means when price is doing something like this, it comes back like this. In this scenario now, this scenario is what I'm explaining to you. It's what we call retracement. Retracement. This is what we call retracement. And the continuation, and this is the continuation phase. We get to this point. Right? This is the continuation phrase. So when I come to this point, I'm going to explain better. So, but in this scenario, let us focus on what we have here. So when you look into your chart, so that it will not be confusing, because the board is a little small. Yeah, it's small. Actually, it's very small. So I want you to get confused as I'm cleaning them. So now in this scenario, this is the chart. This is what you see on the chart. This is exactly what happens here, and this is the clear picture of what happens here. Alright? And in this other scenario, this is a down trend. This is an uptrend, and this is a down trend. So in this down trend, this is exactly what happens here. This is the clear picture. You see, so I only dragged out this in order to show the clear picture, because I'm not having the system here, because we have not gotten to that stage whereby we can be using the system so that we can understand properly. But with this, you can understand even more better what we get. So that what I'm doing now is just to prepare your knowledge. So when you face the system, you won't be confused again. So when I'm teaching you with the system, with the chart clear, you won't be confused. So you'll be like direct to what I'm saying. You know what I'm saying about. That is it for that. So now this is a clear picture of what happens here, and this is also the clear picture of what happens here. Now you can see the candles movement. That's why I taught you the yesterday about the candlesticks, so that you can. Now if you look at every movement of these candlesticks, you can see that after this candlestick close, you are expecting another candlestick to be green. So now, if you can, with what I taught you yesterday, you can be able to read this candlestick and know the candlestick is going to what form again. Now let me tell you something. Let me give you a little secret of candlestick momentum. Now the bigger the candlestick, it tells you the amount, the price, the amount, the billions of dollars that sellers has put or buyers has put in that candlestick. It is giving you the information. The smaller the candlestick, the smaller the price, the liquidity in that candlestick, the smaller the buyers or the sellers in that candlestick. You see it? So this is what I'm trying to see. This is a big candlestick, and this is a smaller candlestick. Now these two candlesticks, which one has more momentum, which one has more volume in these two candlesticks? Now the one that has more volume, more momentum is actually this candlestick. In other words, let me say there is $1 billion. Yeah. $1 billion. And here we only have 100 million. So you see it. We only have $100 million. And we have $1 billion here. So this is how the candlestick gives you information. That was what I was trying to explain to you. So if you are following the instruction or what I taught you yesterday, and also follow up this structural description, you're going to understand more better. You're going to get this knowledge. You're going to learn fast. You're going to grow fast. You see what I'm explaining? And okay, let me take another. You might see another candlestick like this. This candlestick has no volume. It has no volume. Let me just say there is just $5 million. $5 million. Here. And here we have $100 million, and here we have $1 billion. So now, which candlesticks has the power to pull the market either upward and downward? Answer it to yourself. Now you can see that it is this candlestick that has the more volume, the more momentum, the strength, the power to pull the price either upward or downward. In other words, if you see this kind of candlestick in the uptrend or in the downtrend, you should know that this candlestick has more momentum. And any candlestick that we produce after this candlestick is going to close. If this is a buyer, it's going to close by buying. Then if this buy sell, it's going to close by sell. That is it. So let's go to the next phrase. I believe you understand this. So I come again. This is the back testing. Right? This is the back testing. Let me go forward to that back test so that you can understand better, because I'm going to wipe it now so that I can give you a clear view of what I'm trying to explain.